The automotive industry has just gone on strike. So I want to talk a little bit about what that could do for the equity market in the United States and how the effects of that might trickle down to cryptocurrency and Bitcoin. Hello and welcome to Black Box Trading. I am your host, JT, and here on the channel we focus on crypto fundamental and technical analysis. If you're new here, I want to invite you to subscribe, and if you are interested in getting your free Bitcoin trading bot, follow the links down below for blackbox.pro. The automotive workers just went on strike, and it's an interesting point because the US is not really in a position to get super aggressive with wages. The automotive workers definitely deserve a raise. There's no doubt about that. But as time goes on and things become more and more expensive, particularly in the United States in the face of inflation, it gets harder and harder to compete on a global scale. So can the American manufacturers compete with Korean manufacturers? Can they compete with Japanese manufacturers? Time will tell how things pan out and what that can do for the equities. What can be the trickle-down effect of more inflation in the market in the equities overall? So without any further ado, let's go ahead and take a look at the charts here. I want to start off taking a look at the S&P 500. All right, taking a look at the S&P, we're not doing anything really out of the ordinary. This is very typical price behavior that we've seen in the S&P, where you just have a nice consistent trend to the upside, just a very tight range, consistent stair step up, then an event of volatility in times of crisis, and then a continuation of that trend. Now, if we go to the higher time frames, we could look at this a little bit differently. We could look at this as a potential macro lower high. So we do need to be aware that if we really start to take out some of these support structures, the most notable support structure right here at around 422 here on the spider, this is a futures chart, that would not be good for the S&P, and it would be reflected as a negative environment for the American economy. Now, the automotive worker strike, I do want to make a few points here. I think that a lot of it is kind of blown out of proportion, but, fundamentals and technicals don't necessarily need to line up. Why I think it's blown out of proportion is the U.S. is not a manufacturing country. It's not a country that does a shit ton of manufacturing. The automotive industry for GDP of the big three automotive makers accounts for 0.7%. 0.7%. And half of that is unionized. So it's even less. It really doesn't make up a lot of America's GDP. So will it destroy the American economy? Me personally, I don't think so, not on a fundamental standpoint, but it builds a narrative. And the narrative is what you need to be aware of, because a lot of these markets are just propped up with fugazi at this point. It's just all made up bullshit and inflation going in to reflect these assets. So a narrative can be quite powerful. And if we have a narrative in the automotive industry that, further feeds the dragon of inflation, then that could be a bad thing. And we can see markets react on that. Now, when you couple that with the fundamental that we could be looking at a double top here, then that could really, be quite significant, because the next major macro support here on the monthly chart is going to be kind of down here in this area of around 350 to 325. That would be bad. That would be considered, that would definitely make headlines. Now, if this were to take place, if this were to happen, what would that look like on the crypto side of things? Now, I'm going to talk more in terms of Bitcoin for a moment, because crypto's dead. I mean, from a fundamental point of view, you could make the argument that it's not. But from a retail demand point of view, anything that isn't Bitcoin, there's just way less demand in the market overall for the altcoins. You may feel that that's different, but when you look at the on-chain analytics and when you look at the retail, when you look at stablecoin demand and stablecoin decline, there's really not a lot of new money coming into the market, which is what you need for price advances. So I'm going to focus on Bitcoin here. And Bitcoin's at an interesting point. We're currently sitting on support. That's a good thing. Let me point out the support right now. So we're sitting on this macro support line at around $25,000 for the price of Bitcoin. That's a good thing. And if we take a look at the RSI, we do have a bullish divergence sitting on this support. What I'm worried about is A, the lack of demand, meaning that there's not a lot of new money coming into the space, and B, a potential negative narrative that could form in the traditional financial world coming out of the equities space. If we get a little bit of a scare, this market's very illiquid right now. If we get even just a little bit of a scare, that could cause enough of a decline where you start to take out some of the key levels that would signal to the traders that it's time to go short. So some of those key levels would be, let's just go down to the 3-day chart and take a look here. We want to take a look at this low. So basically anything below 24.8. If we get even just a wick below 24.8, that's going to be a signal to the market that we are falling and that it's time to go short or cover any long positions. So do be aware of that potential out there. Now, what would my targets be for a downside move? For that, I'm actually going to go on to alphanumerics because we have some pretty good support ranges. Now, momentum on the monthly chart is coming down. We can see that this red line, this is the 30 moving average. So the 30-month moving average is in a decline. So we can see that momentum is down. Momentum has not been able to curl back up. It is pointing in the downwards direction, which is showing you a lot of downwards pressure. Support ranges for alphanumerics are going to be right at around $23,000. I think we can wick below that personally in the event of a scare, whether it's coming from traditional finance or whether it's just happening locally inside of the cryptocurrency market. We could definitely see a wick that goes down and retests the base. But I want to draw your attention to previous cycles and what to expect in terms of time. All right, so we're going to start things off here right back at 2014, the 2015 bear market. And I'm using the indicator pi cycle bottom. A lot of people are familiar with the pi cycle top. We're going to take a look at the pi cycle bottom here. So what's happened in the past is you have a capitulation low that comes down, and this is peak fear. This is, when a lot of people lost a lot of money, this is where a lot of the value is erased from the market. And a lot of people capitulate and give up and leave. Then you have several months of sideways with a little bit of an uptrend, not much, but a little bit of an uptrend. And then you have another event, another liquidation event that happens. But what the liquidation event does is it does two things. It forms a higher high and it tests the base. It tests the previous support range. So let's kind of break this down a little bit further. Where did it test? It tested right here, kind of where the candle body closed on the weekly chart here to kind of test the base. So to recap, pi cycle bottom flashes. We form the base that is the weekly close of the pi cycle bottom. And then we come down and test the close. Okay, now let's go to the next area here. This one, you're not going to nail the bottom every time. Sometimes it's above, sometimes it's below, but I just want to drill the point home that there's a test. So we can test the whole range here. So you can see where the volatility was, where the seller's climax and automatic rally occurred. Just draw a line from the seller's climax to the automatic rally. And then we had the breakout rally that got a lot of people very excited. And then we had the crash due to the sickness. And that came down, and where did it land? It landed right on the previous breakout area, the previous support of the breakout. So pi cycle, little bit of an upwards price action, retest of the base. Okay, so it's happened twice before. Now let's take a look at today. Okay, so now we have the pi cycle bottom, and then we have a little bit of a rally in an uptrend. And then where can we potentially come down to test the $20,000 level? you're not going to nail the bottom. So I'm not saying, hey, place your bids at 19,100 or place your bids at 17.5 or place them right at 20. I'm just making the point that in every previous cycle, we have come down to test the base. The testing of the base is very, very important because it does one of two things. It gives the final capitulation where dumb money transfers shares and transfers ownership to their rightful owners of smart money. Smart money buyers are in the space. BlackRock is accumulating. Fidelity is accumulating. MicroStrategy is accumulating. All the institutions are accumulating. PayPal, a lot of them are accumulating assets right now. And we need that final flush where the dumb money who doesn't deserve to hold the position is going to sell their shares to smart money. This is very Wyckoff. This is exactly what the Wyckoff method teaches you. It's the method of accumulating stocks and tracking the movements of smart money and positioning alongside the whales. So can we have a retest? Yes, we could have a retest back down to Alpha Numerics is saying 23. The support range is saying 20, 19, something like that. And the pi cycle base here is saying around 17.5. So don't be surprised if you see this. Don't be surprised if we come down to these levels. In my opinion, it's expected, and I'm going to be prepared for it. So hang in there, do the right thing. If there's going to be a big liquidation event at this point in the bear market, you need to be prepared. You need to have some liquidity standing by, and if you're using the black box trading bot, you're currently short right now, which is what I think is the correct thing, the correct position to be in. All right, so how long do we need to wait? Where kind of are we in this price cycle? Well, we can take a few hints from previous cycles. Now, a lot of people get very impatient with this part of the market cycle because it's very slow. Progress is slow. We take a few percentage points up, we give it right back. We give a few up, we give it right back. And that happens over many, many months. People who get into this market come here because they want fast money. That's why they're here. They come in for fast money because everybody and their dog was saying, hey, you got to get into crypto. I made X amount, blah, 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 blah. They don't tell you how much they lost. They just tell you how much they have gained as a result of being in this market. Now, the time at which that occurs is usually past an all-time high break. So here's the previous all-time high from the 2017 cycle. It's a really short period of time where most of the new wave of users come in. It's a very short window. It's only a few months long. This window is, from the previous cycle, it was only 21 weeks. 21 weeks long. That's it. 21 weeks of madness that got everybody who this is their first cycle into crypto. So they get used to a certain type of price performance. They get used to a certain pace of innovation. And it just doesn't work like that. It simply doesn't. I'm sorry, if this is your first bear market, hey, welcome to crypto. We're happy to have you. But let me kind of just build a little bit of price expectation. Now, these two measurements were made from the lows of the previous cycle. So it's basically the time it took from the pi cycle bottom to flash till the all-time high break, because until you break that all-time high, you're not going to see that crazy price acceleration. So in the blue is the 2019 bottom to break, and in the orange is the 2015 bottom to break, okay? And we're tracking along quite normally. This is not unusual price behavior. This is not an unusual amount of time for us to be progressing through the bear market. 2015 took a few weeks longer than 2017. So by that time-based estimate, we could assume that the 2022 bottom to top path could be a few weeks shorter. We don't know. But what I'm saying is I'm hearing from a lot of people, this is the worst bear market that's ever happened. This is the worst crypto's dead. It's never experienced stress like this. It's never experienced a fleet of capital like this. And although, the fleeing capital, that is true, the market is expanding. The emotions are the same. The participants' conclusions of the market are the same. The time durations are the same. The volatility is the same, if not less, to be quite frank. We've had worse bear markets from a volatility point of view. Don't worry. Don't worry. This is the time to be accumulating. If we go and turn on the DCA BTC indicator here, you buy in the green, you sell in the red. Keep it simple. Don't lose sight of what we're doing here. If you're here to make a quick buck, well, good luck to you. Good luck to you, because there are no quick bucks currently. There are going to be plenty of quick bucks to be made once we break past the all-time high. But based off of this time estimate, we're looking at November of 2024, or maybe even December of 2024. So we're looking at late next year before you get the real price acceleration. Now, to be fair, we kind of transition to up only around March, which will be quite in line with the halving. Let's actually mark down where the halving is going to be in 2024. So this line right here, this dotted line, represents where the halving is going to take place. And look at how the acceleration happens after the halving. You've got chop, you've got sideways, you've got bull crap up into the halving, and then the halving takes place and you transition into up only. So, you know, you really only need to wait till the halving, and then things get really crazy near the end of 2024. We're probably going to see a pretty insane bull market for the entire year of 2025. That's my prediction. Is 2025 is going to be the real deal. The type of market that brought you here in the first place is going to happen in 2025. Those are my thoughts. Let me know in the comments section down below if you agree. If you guys are interested in signing up for BlackBox, it's a free trading bot. It will buy and it will long and short Bitcoin on your behalf. It's free to use. We just ask that you use it in one of our partner exchanges. That's it. If you want more information, click the Join Community tab and join our Discord, where you can ask all the questions you want. We're hanging out there all the time, and we're happy to answer anything that you might have to ask, regardless of BlackBox. Anything. Come in. Ask us about wallets. Ask us about DeFi. We don't care. But yeah, that is all the time I have for today. If you guys enjoyed this content, please leave it a like. Don't forget to subscribe. And until next time, please trade safe. It is a jungle out there.